Near Protocol just quietly crossed $6 billion in all-time volume on their Intense platform, and the price is still sitting near multi-year lows. Grayscale's Decentralized AI fund holds Near as their second-largest position. Development activity spiked 460% in 30 days, and fee revenue is being used to buy back tokens directly from the market. Yet here we are, trading under $2 while the fundamentals scream accumulation. I've been tracking Near for months now, and what I'm seeing in both the data and the technicals tells me we might be looking at one of the most asymmetric opportunities in this market cycle. Let me show you exactly what I mean. Near is currently trading around $1.90, sitting near multi-year support levels after a brutal drawdown from its December 2024 highs above $8. The broader altcoin market has been struggling, but here's what separates Near from the noise. The on-chain metrics and institutional positioning are completely diverging from the price action. We're witnessing a textbook accumulation setup where smart money is loading while retail sleeps on the opportunity. Let's break down what's actually happening, because these numbers deserve attention. Near Intense just hit multiple all-time highs this weekend: $3.5 billion in monthly volume, $1.5 billion weekly, and $265 million in a single day. They've processed over 10 million total swaps. On November 22nd alone, Near recorded its single largest trading day ever with $290 million in volume, and the team confirms this activity is organic, not incentivized farming. Now here's what matters for token holders. Near Intense has generated over $10 million in fees, and that revenue flows directly into buying back Near tokens from the open market. This creates genuine buy pressure backed by real economic activity, not promises or roadmap slides. The user behavior evolution is equally telling. 8 days ago, stablecoins and Zcash dominated the volume. Now Bitcoin represents roughly 19% of daily transactions, making it the second largest asset being swapped through the platform. When whales start routing Bitcoin through your infrastructure, that signals serious institutional confidence in the technology. The expansion continues aggressively. Monad integration went live from day one, enabling users to swap over 120 assets across major chains directly into Mon tokens without bridging. Zcash now accounts for 13% of facilitated volume at 587 million since September. This multi-chain interoperability is exactly what the market needs as liquidity fragments across dozens of ecosystems. Now, here's the institutional validation that most people are missing. Grayscale's Decentralized AI fund allocates nearly 29% to Near, their second-largest position behind only BitTensor. Combined, Tau and Near represent over 61% of this fund's total exposure. When traditional finance builds AI-focused crypto products, they're choosing Near as core infrastructure. This is definitely not speculation about future AI integration. Near is actively positioning as the chain abstraction layer that AI agents will use to interact across blockchains. The development activity supports this thesis. Chainbroker data shows Near ranking 4th in development growth, with 460% increase over 30 days. That's builders shipping code while the price consolidates.
Now let's examine the chart, because this is where the setup crystallizes. On the 2-week time frame, Near is forming a textbook symmetrical triangle that's been developing since 2020. The upper boundary descends from that January 2022 all-time high around $20, with clear rejections in March 2022 and December 2024. The lower boundary ascends from the October 2020 all-time low near 50 cents, retested in October 2023 and again recently in September. Price is coiling inside this multi-year structure approaching the apex. Inside this larger triangle, there's a more immediate descending trend line from the December 2024 top that's been respected with rejections in September and November. Near currently trades below this descending resistance. Breaking above it would be our first bullish signal. The moving averages confirm the downtrend. Price sits below the 10, 21, 55, and 100 EMAs. But remember, downtrends are when quality assets get accumulated at discount prices. The Fibonacci RSI hovers between neutral and oversold, pointing slightly downward but not yet at capitulation levels. The volume profile shows point of control around $2.25, acting as a price magnet. We're trading at value, exactly where large players build positions. My Fibonacci analysis anchors from the December 2024 high at $8.30 down to the recent low at $1.75. The 236 retracement at $3.30 has rejected price since March. That's my first resistance target. Here's my strategy. My accumulation zone spans $1.60 to $2.40. Stop loss for short-term positions sits at $1.40. A weekly close below invalidates this structure. For longer-term holdings, I would reaccumulate around $1 on a breakdown. My take-profit targets: $3.30 first, $5 at triangle resistance, $6.90 at the 786 extension, $12 at the 1618, and $19 as my moon bag near the 2618 level. I trail stops as targets hit to protect profits while letting winners run. Risk-reward here is compelling. A move from $2 to $5 delivers 150% gains with defined downside. Best case, multi-100% rally on a triangle breakout. Worst case, retest of $1 support, which becomes a better accumulation zone. What changes my thesis? Sustained breakdown below $1.40 combined with declining on-chain metrics. NEAR is delivering institutional-grade AI infrastructure with real revenue, organic adoption, and aggressive development, all while trading near multi-year support. The fundamentals and technicals are aligning for patient investors. If this breakdown provided value, hit that like button and subscribe for more daily setups. Join my free Telegram group for faster updates. Link in the pinned comment. Thanks for watching, never financial advice, and I'll see you in the next one.